Hello and welcome to the Banker's View from Sibos video series looking at all the hot topics here in Sydney. I'm Joy Macknight, Deputy Editor at The Banker, and I'm joined by Dan Roberts, who is Head of Transaction Banking at Barclays. Dan, thanks so much for joining me today.
Pleasure.
What would you say are the hot topics here in Sibos?
First of all, I think it's really nice that, a bit like last year, it's been a much more positive theme. It feels like a back to growth kind of environment, and people are thinking in very practical terms about some of the challenges in front of us. On the payment side, the big topic's really cyber and what we're doing to make sure that we keep the system safe. Swift GPI is coming up a lot, data and artificial intelligence. On the trade side, a lot of the discussion is still about the digitalisation of trade, blockchain, et cetera, and then clearly there's a sort of broader macro discussion going on about some of the things in geopolitics, particularly, and as a representative of a British bank, I'm getting asked a lot about Brexit for sure.
Okay, you mentioned blockchain.
Yeah.
Sort of what kind of benefits can blockchain bring to trade finance?
It's a really good question. So I suppose the theoretical benefits of blockchain are quite clear. If you think about what trade is, it's a trust mechanism between a buyer and a seller ultimately, and a provision of liquidity for that. And blockchain can solve some of the issues around reconciliation. It can provide its own trust mechanism in a much better way than in the past. So the theoretical benefits of blockchain are really clear. I think the facts are, though, that there's a plethora of different platforms. Some of them use forms of blockchain or distributed ledger technology, others don't. None of them have yet scaled, and I think there's talk at the moment in the industry about interoperability of these networks. I personally think we need to focus on commercializing some of them more. Before we worry too much about interoperability, we need to get some scale into some of these, and that really hasn't happened yet. And I think we need to look at why that's happening first and really focus on that, and then look at the sort of broader interoperability questions.
Okay, and as a British bank, obviously the UK has moved forward in terms of open banking and the move towards open APIs. Again, what kind of benefits can that bring, and where is Barclays moving with that?
Yeah, well, so Barclays on the consumer side, we just went live a few weeks ago with our own aggregation services. So in our mobile apps, our consumer clients can now access non-Barclays accounts, and that's running on the open banking rails. So we started to use some of the benefits. I mean, I think ultimately open banking is about providing more transparency, better customer experience, and certainly we're looking at how we use it to take what we call jobs to be done, so the things that our consumers or our corporate clients want to achieve, and use technology and use things like APIs and open banking to make those experiences more seamless, quicker, hopefully cheaper for us and hopefully cheaper for our clients as well in the long run.
So do you think it will have a big impact on transaction banking?
I think open banking will have an impact on transaction banking. I think one of the things we've been surprised about, we didn't think the adoption rate would be that fast actually in the UK, but I would say that actually so far the adoption rate's been slower even than we were expecting. So I think it will have a profound impact, but it's going to take a long time to really flow through. I think in transaction banking, one of the areas I'm most excited about from an open banking point of view is most banks are less global now than they were a few years ago. And I think open banking and the protocols of open banking can allow a sort of next generation of partner banking to emerge, so that we can patch together, if you like, regional banks in a way that really delivers a good customer experience, and the open banking rails potentially can allow us to do that. And
you mentioned, again, Swift GPI, the Global Payments Innovation Initiative. Do you think it's come of age? And again, where do you think it's heading to next? Yeah,
so we're really excited about Swift GPI. Barclays was involved from the beginning in the initiative. We're fully live. We think it's going to provide really big benefits. So, ultimately it's about provision of transparency for what is, historically been a really quite an opaque chain of activities through Swift. So, I think we think there's some real benefits. Has it come of age? I think it's right in the process of coming of age. Obviously, with the November standards release, it becomes, much more scaled. I think it will take another couple of years to really scale, because if you think about the sorts of pain points our clients face, one of the biggest is claims non-receipt of funds, or beneficiary claims non-receipt of funds. Swift GPI will still be probably 2 years away before it can reliably answer that question on a case-by-case basis. But when it does that, I think the implications are really positive for the whole market, actually.
My last question is around, how do you think correspondent banking needs to change really to stay relevant to its customers?
I think correspondent banking has an existential fight on its hands, frankly. Actually, when you look at things like Swift GPI and the transparency that brings, when you think about things like ISO 20022, when you think about the emergence of instant payments, those things coming together over the next few years are going to change the marketplace profoundly. And so the banks, the correspondent banks and the FI community, we have to adapt. Our consumers and our corporate clients ultimately are expecting things to be done quicker, more openly, more transparently, cheaper, more accurately. And all of that is going to drive change. So I think we have to acknowledge that we have to take cost out. We have to continue to improve the customer experience, and we have to acknowledge that some of the age-old ways of doing things, which include things that deliver quite a lot of margin to us today, are actually not sustainable. And I think we have to reinvent some of those things. Otherwise, we will become a target for other ways of solving these things, because the clients ultimately will find a way to do it cheap, successfully, transparently. I think the correspondent banking market has the ability to respond to it, but we have to do that over the next few years, otherwise we have a big problem on our hands.
Excellent. Thank you so much for your insights, Dan.
Pleasure. Thanks for the invite.